Coverage of the 2014 annual meetings of the International Monetary Fund and World Bank Group is proudly brought to you by RMB and KPMG.
Hello and welcome to this IFC CNBC Africa debate. I'm Nozi Pombanja. The world is waking up to Africa's growth story and the investment engine that drives it. With this in mind, what is the continent's growth outlook? This is the question that our panelists will be taking on. And we are honored to have on the panel the Prime Minister of Cote d'Ivoire, His Excellency Daniel Duncan, the Minister of Finance in Rwanda, Honorable Claver Gatete, the IFC's Vice President for Global Client Services, Mr. Jean-Philippe Prosper, the Managing Director of the Nigerian Sovereign Investment Authority, Mr. Uche Origi, the CEO of AGH Capital, Mr. Charles Okohalem, and last but certainly not least, we have the CEO of Africa Rising Capital, Mr. Mandla Gancho. Now, I began by asking the Prime Minister to share his insights on the remarkable turnaround story of Cote d'Ivoire. On the brink of civil war, the country and the economy has rebounded strongly, posting growth in excess of 8% for the last 3 years. How has Cote d'Ivoire achieved this remarkable success, and what can we learn from it?
Since the independence from 1960 and to, let's say, 1999, Cote d'Ivoire was a stable country. And, GDP growth rate rose over an average of about, let's say, 5 to 6%. But unfortunately, as you mentioned, there was some turmoil, and we went through one decade of difficulties that ended in 2010. And since then, as you mentioned earlier, GDP is rising by an average above 8%. And the main reasons are the fact that first, we have political stability again in Cote d'Ivoire, and also we are an open country to foreign investment, not only local but also foreign investment. We have a one-stop shop in which you can create an enterprise, your firm, within 24 hours, not months, but 24 hours now. And also, we have make important structural and sectoral reforms in Cote d'Ivoire. So now the private sector is the engine of the economy, both national and international. For instance, if you take the case of 2012, the private sector accounted for 62% of investment made in the country, the private sector. And we hope that by 2020, that will be 70%. So we have to improve the environment. And one of the key sectors is, of course, agriculture. Not only the production, but also agribusiness, because that's the basis of the economy. We are moving also to the mining sector and the oil sector. And the services like airport, ports are also playing a prominent role in Cote d'Ivoire. We hope that we'll reach next year a double-digit growth, and to keep it onward, because the main aim of the president, the ambition of the President of the Republic, President Alassane Ouattara, is to turn this country into an emerging market by 2020. That's our ambition. An
emerging market by 2020. Honorable Minister, one of the key points that the Prime Minister raised was on the ease of doing business. Now, we know Rwanda is a poster child for Africa. It takes, according to my research, 6 hours to set up a business in Rwanda. How do you get that right?
The first, I think, indication is that our president took a decision that we need to open up to the rest of the world, not only an African continent, but also to the rest of the world. To do that, we had to do a lot of reforms, including capital liberalization. For African countries, you don't need a visa to come to Rwanda. You just get at the airport. And we made sure that we treated the investors, foreign investors, as the way we treat the Rwandans. The first thing that we did was to make sure that we changed the institutional arrangement. We had to establish an institution that becomes a one-stop shop or a center where you don't need to go anywhere. And also, we had to make sure that we use the IT as a platform to make sure that if you wanted to open, for example, a business in Rwanda, you don't need to be in Rwanda. You can open it anywhere. In Rwanda, also, it can take you 6 hours. And you had to go through the checklist and learning from other countries that have made that have succeeded to see how to do it right. And now it's paying off because we are seeing more investors. They are getting satisfaction. We are following them up. And this also there is a basis to that because we managed to make sure that we focus on macroeconomic stability, on peace and security, on governance, and making sure that the IT becomes a platform where we can leapfrog rather than going the traditional way. Because our Vision 2020 is backed exactly by the vision for the ICT, whereby now we are in the process of implementing the 4G LTE.
A lot of interesting issues raised that will come to, ICT being one of them, agriculture being one of them. But perhaps, Mr. Prosper, we've heard just from two country experiences about how we're seeing the ease of doing business improving on the African continent. If we just reflect back to the past fiscal year, we see that the IFC has committed in excess of $5 billion in investments to sub-Saharan Africa. In terms of the advisory services that you have committed to, this is in excess of $65 million. Now, my question then becomes, where are the engines of growth really from your experience? Which markets or sectors should be on every investor's hot list as they seek to become part and parcel of the story unfolding on the continent?
Thank you very much. First, let me, before I go into the market that we're asking, let me just say that first, I'm extremely honored and pleased to have two of our best clients. We are working very closely with Cote d'Ivoire and Rwanda, who are two countries have been excellent progress, over the recent years, and is basically thanks to their leaderships, and the leadership that they have, the quality and the commitment of the people, and of course they have told you, and if you find out, you'll try to find out, you will understand. Now, going back to your particular question, the other thing it's important to mention, why IFC has been able to do, you say, more than $5 billion of investment in sub-Saharan Africa. It's not by coincidence. It's because over the past 10 years, African countries have been undertaking very serious reforms. Yet we are not there. There's still a lot to be done. However, there's been a lot of progress being made, both on macroeconomic reforms and also investment climate, being able to attract businesses. Now, in terms of the specific sectors that you mentioned, I would say definitely infrastructure. Right. First, because it's a huge need for the continent, and the opportunities abound. And I would insist particularly on power, electricity. It's very important also for the country. There is no way you're going to be able to grow the manufacturing business in Africa, or agribusiness for that factor. The Prime Minister mentioned agribusiness. If you want to start transforming, your raw material, not just exporting raw materials, you need electricity and so on and so forth. So it's extremely important. So infrastructure in general, transport, connectivity, railway is going to be very important. If you look at industrial area, what happened, all of those countries has better connectivity. Regional integration will play part. So infrastructure, that's one. Second, we mentioned everybody tells you, well, in Africa, most of the countries, they are agricultural based. Right. Because you have a lot of potential. You may know that more than 60%, around 60% of arable land in the world, they are in Africa. So how we are going to take advantage of that and grow really use the advantage of those land, get proper agriculture and agribusiness. So that's another sector with huge potential. So I would, say focusing on those two sectors. Of course, you need IT to. It's going to be very important to leapfrog. From where you want to go more, to give mobile money access to finance and so on and so forth. So I would say those three I would mention: user infrastructure, agribusiness, and definitely more IT. Of course, there are others, but that's where I would start.
Right. Mr. Oche, how does that sit with you, that lay of the land, infrastructure, agriculture, and ICT? In particular, if you map it against the key focus areas of your particular fund, do they reflect the growth areas and the opportunities that we're hearing from Philippe?
Yes, I will probably just give you one answer. Yes, it does. We started out, so we have 3 funds we run, but the fund that is relevant to the conversation is our infrastructure fund, which is focused on Nigeria. And the NSIA started out 2 years ago, and we narrowed down out of what we saw as 18 investable sectors in infrastructure to 6 to start with. And those 6 are motorways, power, agriculture, healthcare, real estate, and more recently we added gas processing and transport, where we made a credit investment for power sector. So the challenge you have, obviously, we've talked about electricity being a problem in Nigeria and most African countries. It is fact, there are many industries that were very vibrant. Textiles, for example, they were very vibrant in the northern part of Nigeria that has since then died, largely because of lack of electricity. So it's an area for us that we are investing. But what's more interesting is also people need to understand that these sectors are good business. It is tough to explain to people that healthcare, agriculture, power, motorways is all very, very interesting businesses. NSIA has an expectation to do these things, not just for social reasons, but actually for profit reasons. So we're going with a base return expectation of US CPI plus 500 basis points in infrastructure. And believe me, most of what we have seen are way in excess of that. Because partly people are used to paying the alternative, which is really very expensive cost for electricity. So bringing, most people I know who pay as high as 28, 30, 35 cents per megawatt per kilowatt hour, which is 4, 5, 6, 10 times more than you pay in most other places in the world. So the reality is the numbers could be much lower if this is invested. So people will pay because the alternative for them is actually far more expensive.
Right.
So it starts to look very, very, so frankly, it aligns. However, the angle I want to take in this discussion is to talk about the issue of aggregation of capital. There is a very interesting trend happening in Africa where most African countries are now putting together sovereign wealth funds as a way to aggregate a whole new pool of capital. Go through Africa, many things are obvious to you. Number one, equity is lacking. And this is one of the things we're going to try to address. Number two, capital markets are not deep enough. Right. Cost of capital is very high. Bond market is underdeveloped. We can go down the checklist. The good news is we're having this discussion now. 10 years ago, we're talking about aid, and we're talking about people giving us arms and all that. Now this is advanced. So it is fantastic, I think, as a basis. The point, however, is that everything is needed. African countries must be encouraged to manage resources better through the establishment of funds such as ours, like Sovereign Wealth Fund, which will address some of these capital needs issues as we start to invest in infrastructure. So to answer your question, yes, it does.
Absolutely. So I see Minister wants to make a quick comment before I come to Mr. Okeholam.
Yeah, I just wanted to make 2 quick points. One is really to support what Uche is saying, that number one, we saw the importance of the IT transforming the financial sector in the case of Rwanda. That's the first time when we introduced the IT system, the broadband that was introduced by our head of state, that we saw the banking system interlinked. That's the first time we saw the core banking system being introduced, the normal data, FlexTube, and the rest of it, which you could find in North America and elsewhere. And that's the time when we saw our banking system being interlinked from the small savings and credit cooperatives to the big banking system to the entire transaction and the link with the capital market. So we saw that one becoming, it was an attraction to the visa to come into Rwanda. It was an attraction for the commodities exchange that is now using the OMX system, NASDAQ, because of the IT system. And it has helped us actually link the region where we have the East African payment system that is being interlinked, which has reduced the cost of transaction very, very significantly. Another point that he is making that is very, very crucial is that no matter what we do, we cannot really prosper without reforming the entire financial sector, the capital market.
Right.
And that capital market, we already have a base because we already have the pension funds, we already have insurance, we have other domestic resources, but we need to clean up and make sure that the capital market works and is interlinked. And this is going to become really a very good driver for the economic development on the African continent.
The next logical then question that you should be taking on, Mr. Okeholam, is that how do we then position infrastructure as a palatable investment opportunity for long-term investors, in particular pension funds? How do we make this long-term alignment between these two partners?
Thanks for that, Nozipo. I think I'll start off by saying that, about 10 years ago, or even 5 years ago, the discussion on infrastructure was very separate. It was as if to say it was something that we would talk about afterwards, but not a core thing. I'm so happy it's a core issue now. And I'll explain why. The key reason is that the cost of doing business in Africa is very, very high. So that, the hurdle rate for those of us looking to raise money and deploy it, we find that the returns, expected returns, are very high. And that's partly because the cost of doing business is very high. And one of the key costs is infrastructure. And I don't have the statistics with me here, but apart from manufacturing, the input costs of manufacturing, the input costs right across the board are high. So that when you now say you've got a similar kind of investment in another part of the world, which has the same numbers, the same kind of company structure, same kind of sales forecast, same kind of customer base. Now, one thing lacking there is the infrastructure platform from which to generate that base. So what has to happen really is that bond markets, pension funds, as the minister just rightly pointed out, and as Uche pointed out just now, we have to find a way to transform those funds, which are in the form of savings, and bring them into our pool of capital, and find an efficient way of allocating that capital directly into the real economy, and drive down the average costs of production for electricity. And let me even go further and say, we have to then do that away from silos, away from the national silos, and then do this on a regional basis. So to achieve this, we will need a greater emphasis on regional integration, a greater emphasis on capital market development, specifically long-term bond financing, and we will, of course, need the political will to ensure that we can do it on that level.
Let me get Mr. Gancha an opportunity, and then we get to the Prime Minister, and then I see that, Mr. Orji, you've been taking down notes furiously, so we'll get some of those comments on that piece of paper. But I want you to take on the issue of regional integration that's been raised here. And to what extent are you seeing a harmonization of policies, of regulatory frameworks, an alignment of political will to make sure that the picture that Mr. Al-Kahalim speaks about is actually being painted on the canvas that we want to see?
Well, Nozipo, thanks for the question. It's very heartwarming to hear my government leaders testifying to the progress that we are making in Africa in terms of creating a conducive investment climate for investment in countries as well as in regions of the African continent, and also investment into sectors such as infrastructure, which is quite key to the question that you are asking. We know that the macroeconomic environment has improved a great deal over the last 10 years. The regulatory framework has improved, safety and security that was mentioned, capital markets are being deepened. All of these things you need for the infrastructure development endeavor, which is very complex, it is money-sapping, it's time-consuming, and it becomes even more difficult and complex when you look at regional infrastructures. Cross-border infrastructures, and infrastructures that I define as regional even though they may be in-country, such as the development of vital infrastructures on the coast, which then enabled landlocked countries to have access to international markets. Now, regional infrastructure needs the things that you have mentioned, things like the harmonization of policies and regulatory frameworks, because of the number of parties that get involved. In developing regional infrastructures, it becomes very difficult to start and complete a project that is of a regional character because we have differing financial capabilities by the various role players, including countries. We have got utilities that are responsible for running these infrastructures that are different in terms of their capacity to maintain those infrastructures, let alone just executing the regional infrastructures. So regional infrastructure is a very complex endeavor. It's encouraging to note that in Rwanda, for example, and the neighboring countries in East Africa, they've done a great deal in terms of harmonizing their policies, even in ICT, in transport, as well as just making sure that there is a conducive environment for investors to move freely between countries. And also the connectivity in terms of people just using their own connectivity mechanisms such as telephony. So yes, indeed, regional infrastructure is very important and it requires all of those things that
it requires all of those things. Mr. Prime Minister, let's get your comment in.
Well, I would first like to react saying that as far as Cote d'Ivoire is concerned, we have a long way to go because my friend from Rwanda said that they can create a company within 6 hours. I mentioned 24 hours, so we're a long way to go. That's the reason why we send our people in Rwanda to see how they made it.
Yeah.
And I think it was a fruitful mission we sent to Rwanda. So because you have to learn within Africa. Okay, that's the first comment I would like to make. As far as economic infrastructure is concerned, I think I have an example of what we have done in Cote d'Ivoire relating to electricity. Now Cote d'Ivoire supply electricity to Ghana, Togo, and Benin, and also to Burkina Faso and Mali. And we've been asked to supply electricity to Liberia, Guinea, and Sierra Leone. So we are a kind of hub of electricity in the sub-region. Our production is about 1,600 megawatt, and we want to reach 4,000 megawatt by 2020. So that the consumption electricity in the country is about 10%. The sub-regions 7% a year. So that's 17% totally. So we have to boost the production and also to share the electricity with the sub-region. Well, that's the first comment I would like to do, and saying that when we begin to increase the production of electricity, we intend to make a BOT, Build, Own and Transfer, of the private sector. I must confess that at that time, the World Bank staff, technical staff, were not in favor of that.
Right.
But we are fortunate enough to have Mr. Wolfenson, that the president of the World Bank at that time, that I met him and he said, why not? We can do it also in Africa. Finally, we made, Azito in Cote d'Ivoire, that's a thermal power plant of about, at that time, 160 megawatt, totally financed by the private sector. And now it's a kind of flagship of the World Bank. Okay, and they sell it to Nigeria and the other countries. So, well, that's an example of what has been done. As far as intra-African trade is concerned, we have an average of about 11% trade within African countries. As far as Cote d'Ivoire is concerned, it's 23% of our total trade. But we have a long way to go because we want to reach 50% by 2020. That's a long way to do because that's really important. We can export in the sub-region. And for instance, Nigeria is our first world supplier before developed countries, for instance. So, well, I think we can do it if we really make market research, if you travel to see other countries, and to take example from other countries, we can improve the situation in West Africa. Finally, the only thing I would like to add is that one thing is also really important is capital human resources.
Right.
Education is the real wealth of a country.
Education as a real pillar. So let me get a quick comment from you, Mr. Prosper, and then I want to come back to Mr. Audrey just to get some of those scribbles on, and also maybe to get some of your comments on debt markets as an alternative way of getting the financing moving.
Yeah, a very quick comment. When the Prime Minister mentioned that Nigeria is, for example, his biggest supplier, it's pretty warming to hear that. Why? Because intra-regional trade is the lowest in Africa if you compare to any other region in the world, and the potential to really for those countries to work better together, to work closer together, and increase, the growth everywhere is enormous. So I think I would take the opportunity to highlight that's something that we need to focus on, and that as IFC, that's something we are focusing on.
What are the bottlenecks in your view? Where are the bottlenecks? Why are we not superseding this 11% that the Prime Minister has referred to? If the opportunities are there, if the markets are there, why are we not growing the share of intra-Africa trade?
Infrastructure. Road, railways are one of the main constraints.
Yes. I think connectivity, as the Prime Minister mentioned, the Urban Minister was alluding to also, it's clearly one of the key bottlenecks. And when you talk all kind of connectivity, even actually, if you look, traveling even within Africa, if you go West Africa, it's quite a challenge within West Africa or within Central Africa. For example, from one country to another, sometimes easier to fly all the way to Paris and come and go down.
But we are seeing East Africa making some inroads in terms of the aviation space. We've seen a number of low-cost carriers coming to market in the East African space. How are you changing that play, especially around air transport as a means of moving people and goods?
Yeah, thank you very much. Really, I think this takes leadership. And we can no longer look at ourselves as individual countries. The case of East Africa is very, very, very clear. When the heads of state for the Northern Corridor, that is Kenya, Uganda, and Rwanda, took a decision to fast track the implementation, and they sat together and they said, we're on single customs territory, we are not there yet. What can we do? And they decided to remove all the non-tariff barriers, the roadblocks, the way bridges, all other disturbances. And once they did that, starting from last year in June, now it has really brought the cost of doing business down. We used to take 22 days from Mombasa to reach Rwanda. Now it is taking 5 days. It used to take 18 days from Mombasa to Kampala. Now it is taking 4 days because of all that. And the cost of a container has reduced by half because of the decisions with heads of state. They decided also that they want to make sure that they deal with infrastructure, with the railway. We are now working together to make sure that we address the issues of the railway. We are working together on electricity to make sure that we harmonize the grid to 400 kilovolts so that we can be able to import and export depending on who has a deficit or a surplus. Now, the regional approach is working, and that's why we're undertaking projects in energy with Tanzania and Burundi, and also with DRC and Burundi. Meaning that actually once we address the issues of infrastructure, then it works. Then secondly, our countries also have removed all the other barriers of needing a passport. That means I can travel to Uganda, to Kenya, just with ID. And this is for everybody. And that really helps in terms of reducing this kind of non-tariff barriers. So the free movement of people, the integration in terms of the monetary union, which East Africa is now moving to the monetary union, is helping in terms of harmonizing the financial sector, the monetary sector, the convergence criteria, harmonizing statistics, and making sure that we become one monetary union. And doing that really requires the leadership of the heads of state in the region, believing that we can only succeed together. You can no longer have the luxury of one country succeeding alone. And this is how we can increase the trade within the region.
Mr. Orji, let's get your comments in. Right.
Well, the notes I was taking was to remind myself to tell our Minister of Trade and Investment in Nigeria that it takes 6 hours to set up a business in Rwanda.
So
don't ask me how long it takes in Nigeria. But there are quite a few things I think that are clear. One is obviously the policy transformation is working, right? And you're seeing it, big examples, small examples across the board is starting to happen. But the one big area that I still want to spend time a bit and is to respond to or make comments about two things. One, the Prime Minister alluded to internal capital, pension funds, insurance companies. How do you get those people to participate in the sector? And also to talk about some of the challenges of investing in infrastructure. I know everybody talks about infrastructure needs to improve. The base cost of infrastructure is so high, that's why the cost of doing business is high. What is not mentioned is that the offset is that the returns are incredible as well, because the input cost is very, very high. And so as a consequence, there is still a reason for you to come. But more importantly, it's also about what are the challenges in making infrastructure investable as a sector. These are the things I think we will need to speak to. The first challenge I notice is the challenge of project preparation. There are 3 roles NSIA can play. The first role we play is the role of an investor. We would like to just remain an investor, passive, we'll write a check, and we'll watch our investments. However, we find ourselves doing 2 other things. One is co-developing projects because the projects are not well prepared. And then the third is actually finding ourselves in a position where we're starting to sponsor projects. So these are the 3 things we find ourselves doing. And the reality is that a lot needs to be done to get some of these projects to the point where it is easier for passive investors to have one look at it, see a term sheet, and write a check. That requires investments. I must point out here, I think the World Bank and the IFC in particular have done a lot in helping NSIA actually playing that role. And I think that's something across the board that still needs to be developed to make it an investable sector. To the point of mobilizing local capital, what I have observed, particularly in the case of Nigeria, is that there is so much latent capital by way of pension funds and insurance companies that just buy government paper. It's interesting, but how do you get that capital to participate in infrastructure? Because that is really the capital that builds infrastructure. In all the other countries where we live in, it's pension funds and insurance companies that have played that role. One of the questions we've asked ourselves is what is the barrier? Obviously, there is an element of being crowded out by government paper. If government paper is paying 12, 13, 14%, why do you bother? But at the same time, it's also the issue of credit enhancement. If you look at some of these pension funds, it is hard for them to invest in the market as it is without some form of enhancement. And I think that is one gap that needs to be filled by way of institutional reform.
Right.
That needs to build that.
I've got a minute before I have to go to break, so let me get that long-standing comment, and then we'll take more comments when we come back from break. Mr. Okalam.
Yes, I was just going to back that up and say that this quest to get infrastructure on the continent has to be looked at on a regional basis if we're going to be able to make it efficient, really. And that's why the point made by the minister from Rwanda is very well taken. And that's why the crisis in Sierra Leone and Liberia and in Guinea with Ebola is very sad, because it has had a negative impact on that region, not just the direct impact on health, but also the plans to move people around freely that is so essential to use the infrastructure that we're talking about, and the multipliers of that problem. But that should not stop us from looking at ensuring that anything that we plan, if it's to work effectively, must be on a regional basis.
Infrastructure has certainly dominated the first half of our debate, bearing testament to its importance as an enabler of development and a key feature of sustainable investment in Africa. We're headed into a short break now, but when we come back, we continue to interrogate the case for Africa's investment. Welcome back to this special debate at the IFC headquarters here in Washington, D.C. Now, just before we went to break, we were continuously speaking about infrastructure as a key enabler to Africa's growth story and the sustenance of that growth. Mr. Gancho, let's come back to you and let's get your burning comment that I know that you wanted to add to this conversation before we move on from infrastructure.
I wanted to add a comment on the financing of infrastructure, because infrastructure is not just developed for the sake of developing infrastructure. It's developed for the purpose of promoting trade. Most importantly for me, that you want to enable African countries to trade with one another, instead of always focusing on just exporting raw materials to the outside world. So that is very important. You need that enabling infrastructure. But what is a constraint in terms of that regional infrastructure theme that you were talking about? I think one of the constraints that has not been mentioned is the financing of the early stage development of infrastructure projects. And this is where you need development finance institutions and governments to play a role. I mentioned that infrastructure development is a complex endeavor that requires the concerting of efforts by the various players. But in this particular area, where there is a lot of risk for the private sector, you need these two players to de-risk infrastructure and credit enhance and therefore raise the returns that the private sector is looking at getting by getting involved in private sector. And you are removing that competition between other types of instruments that private sector may be getting higher returns from versus infrastructure projects, because infrastructure projects also governments need to understand, and I'm making these comments directed at my government leaders who are here. We need to acknowledge that there are other benefits that we get from infrastructure that are not of an economic nature. And these benefits need to be also taken into account when you de-risk infrastructure projects in order to get private sector to be involved. The preparatory facilities that development finance institutions have need to be consolidated, because in most instances you find that they have got different requirements for the same types of projects, and they tend to confuse the recipients of projects and also the benefiting countries. And so you need to also pay attention to this issue of financing early stage, not only in terms of grant funding, but also taking equity. Governments need to understand that we are also investing in order to earn a return from these, and therefore they need to also acquire a stake in the projects and exit at the time of financial close of these projects or post-construction of these infrastructures that are being built. And therefore, in that way, they would be getting their financial return and plow it back into new infrastructure projects. That's the comment I wanted to add.
Absolutely. Perhaps, Mr. Prime Minister, let's get you taking in the final word before we move the conversation on. And in particular, I think your comment was going to center around looking at regional integration progress that's also been made on the western side of the continent, and given the fact that we're always speaking about the EAC as the poster child, maybe at the peril of realizing what's happening in West Africa.
I think you are right, because we have, for instance, 8 countries belonging to what is called the West African Economic and Monetary Union. They have the same currency since 1962, the same currency. Okay, so that's a union. And also we are creating another union bigger than the first one, that's ECOWAS, with 15 countries, including Nigeria, and with 300 million people. And what is really interesting is that we are making infrastructure, economic infrastructure, linking these countries. For instance, already existing, there is a railway linking Côte d'Ivoire to Burkina Faso, 1,200 kilometers. And now we are decided to go to Niger on the north. Well, and then back to Togo, Benin and Togo. That will be a kind of circle. The other project which is really important is a highway, 6-lane highway, linking Abidjan, Côte d'Ivoire, to Lagos, going through Accra, Lomé, and Cotonou. That will be about 1,000 kilometers. And that will change things, right, because 60 million people are concerned by this project. So, well, that will be a kind of BOT with the private sector. And IFC and some of the donors are approached to see this kind of project. I think this kind of connectivity can change things on the ground.
Certainly game-changing opportunities on the ground. Mr. Prosper, let's shift the conversation for a second. Let's talk about agriculture. We often hear, and we've already heard this morning, that this is Africa's natural comparative advantage. Are you therefore seeing agriculture being prioritized from a policy perspective in the different African countries? And are governments doing enough, in your view, to create a conducive investment environment for private sector players to get their foot into the sector?
I've seen progress. Clearly, it's not there yet, but definitely a number of countries, and the Prime Minister next to me has been at the forefront of this in Ivory Coast. We have been working very closely with him and his team, to try to make changes. Rwanda, I'm mentioning them because they are here, obviously. I can mention also making a lot of progress, and we are quite involved in those 2 countries in both sectors. However, we're saying there's much more needed to be done. The other thing is that you cannot develop it like in an isolated manner, because we're talking about infrastructure before. Yeah. If you produce today, for example, many of the goods, fruits or whatever you get from agriculture are being spoiled, rotten somewhere.
Because there's no infrastructure.
Because you cannot transport them to market. Actually, in terms of food, it is estimated that on average in Africa, about 40 to 50% is being, spoiled on that front. So you need all of these. You need to have, and if you want to process, I was talking about agribusiness, you need much more. We're talking about electricity. And you need more fertilizer. Also, you need training to support the farmers. Some of this is happening, but not enough.
Right.
And so definitely we are on the right track, but it's going too slow. We need to move much, much faster on that front.
Mr. Orji, just yesterday, speaking to the Minister of Agriculture from Nigeria, Mr. Adesina, he was saying that the turnaround of that sector has been nothing short of remarkable. And in particular, if we look at the produce of rice in Nigeria. My question then becomes, how do we replicate that story? How do we get more sub-Saharan African countries moving from talking about potential food insecurity to becoming key players in the export of those agricultural products?
Sure. No, I think the Nigeria experience, and full disclosure, we invested in a fund for agriculture finance alongside the Ministry of Agriculture in Nigeria. So talking about public-private participation in pooling capital to address certain issues. There were 4 things that I observed that were done in Nigeria. One is, first of all, you have to avoid what I describe as a policy blunt instrument. You don't want to raise tariffs until your supply side is ready. Otherwise, you're going to create hardship for people. You're going to drive food inflation. These are the concerns you have, first of all. So you must make sure you get that balance right. So Nigeria has especially in the area of rice, done a lot of work there. The second thing is, in my opinion, is actually focusing, putting your money where your mouth is. The government has put a lot of capital through the central bank intervention funds. The government has encouraged the creation of specialist private equity funds for agriculture, which was one of the funds we invested with the government as a participant. And this, I think, is beginning to bring capital to where it is needed the most. There are two other things that still need to be done, in my opinion. Number one is development. Again, you know, they say if you're a carpenter, every problem is if it's a hammer you have, every problem is a nail. I look at these things from a capital markets perspective. I still think one thing that needs to be done is the development of local commodity exchanges. It's very, very important, in my opinion, for this to make it easy for you to have a futures market. Then we can move from collateral-based lending to cash flow-based lending. And cash flow-based lending can work if farmers know that they can sell their product 3 months, 6 months down the line with a fairly certain price level. One last point, shared infrastructure for small-scale farmers. This is probably, in my opinion, the one area you're going to make the biggest impact. Jean-Philippe was talking about fruits rotting because they're not being transported on time. There is an investment opportunity right there to put silos, to put refrigeration units that can be done on a small scale and provide shared facilities, and people can pay for those things.
Right.
So there's a lot that can be done, and I think a lot of the solutions are actually just looking closely inwards.
Honourable Minister, I'm going to steal Mr. Orji's words and be cheeky. If that's him, it's not me. Are you putting your money where your mouth is?
Yes, indeed. Yes, indeed. I think I agree completely with what he's saying. I think what was lacking was previously the way agriculture was being perceived. It was farmers and it was government. The private sector part was missing. And for the whole value chain, from transportation to storage to markets to processing, the private sector was not very dominant. And what we need to see is that we are in partnership, government and the private sector together with the farmers. How do we modernize agriculture in Africa?
Let me get a quick yes.
For instance, if I take the case of Côte d'Ivoire, we have a 5-year plan, 2012-2016, on agriculture. It is a $4 billion project. 60% of it is financed by the private sector, both national and international. And the government financed 40% of it. And there is a big change on the ground. You know that Côte d'Ivoire, of course, is the world largest producer of cocoa, with 1.7 million tons. Whenever you eat cocoa, chocolate, maybe 1 out of 2 come from Côte d'Ivoire. Okay, so that's really important to mention that. But also we are doing the same thing as far as cashew nut is concerned, because we are the world largest exporter of cashew nut. But what we want to do is not only for exports, but also for foodstuffs.
Right.
And be a kind of basket of the sub-region, because we have enough land, but we have to improve the yield to make irrigation. And for instance, rice will cover our need next year, and will double the production by 2016, so that we can export to Sahelian countries on the north. So I think agriculture is really important for the sub-region, not only for food, feeding the people, but also to make processing, because we have enough possibilities for investors, both local and international, to invest in the agricultural sector.
It certainly sounds that there are opportunities, Mr. Gancho, around value addition and beneficiation. Now, and I recall a popular line that one of my colleagues likes to use is that sometimes investors will talk about policy uncertainty. When there is a policy, they just don't like the policy on the table. Now, in light of that, are we finding that there is enough of a push from the part of the African governments to push for beneficiation, to push for value addition, in particular as we try to develop the value chain of agriculture?
Absolutely. I think our governments are doing more than enough in terms of promoting the policies of beneficiating raw materials, including agriculture, that are produced out of the African continent. And I agree fully that we need to modernize the agriculture supportive infrastructure, as well as the enabling environment for financing agricultural market development activities.
I just listening to you answer, Nozipo, in your experience as the former CEO of the Development Bank of Southern Africa and the Vice President at the African Development Bank, How did those institutions play this kind of role in supporting government?
Well, we created facilities, for example, for establishing commodity exchange markets at the ADB. At the Development Bank of Southern Africa, we financed beneficiation facilities. We recognized that it is expensive to transport raw materials, including agricultural products, from production sites to markets, and therefore we facilitated the financing of that particular infrastructure, the logistics that are involved in that. But I think also at a policy level, we need to have an enabling environment at that level, and we financed studies by various governments in order for them to undertake the necessary reforms that need to take place in that particular market.
This is a response, a reaction to that statement.
Yeah. I just wanted to really take it from the commodities exchange that you mentioned. I mentioned that now we have a commodities exchange in East Africa. Rwanda is the headquarters of that, and they are using the NASDAQ platform for the settlement. But what is very helpful is that they have started the warehouses where you pull all the produce from the farmers. And once you put the produce there, they give you a receipt, what they call warehousing receipt. And this receipt, you take it directly to the banking system and raise money without any need for collateral. And this really is helping the farmers because you don't need finance. Another issue which you have complemented as government of Rwanda is all the land in Rwanda is now registered. And because it is registered, it's computerized. Now one can use it as collateral for different purposes. And most of the land, of course, is also owned by the farmers.
Right.
And because they have the ownership, they also take advantage making sure that you can use land consolidation. So many farmers getting together and growing 1 or 2 crops, do it modern, and then you have a market, and at the same time you share the produce, the value, depending on the size of your land.
What has that done for the integration of women as active participants in the economy? Because no doubt we are the ones who work the land in the agricultural space.
That's actually they have benefited even most, because in Rwanda the law has been changed now to make sure that the men and the women all have equal access to land in terms of ownership. So we have changed the ownership of land to make sure that we all have equal opportunities. And as you can imagine, women who have been on agriculture, who are dominant there, are the ones who are benefiting from this kind of policies that our government have put in place. And really they are moving up when you talk about agriculture throughout the whole chain, including access to financing, where they get together. They are the ones that are benefiting most from the microfinance institutions, the savings credit cooperatives, and they are the ones actually who I would say, if you look at our central bank numbers, that if you look at the non-performing loans, actually for them they are the lowest. So they are giving really confidence to the banking system.
Of course they are the lowest, but we'll come back to the issue of microfinance. Let me get a quick comment from Mr. Prosper, and then let's go to Mr. O'Connor.
Yeah, the quick comment is when the Honorable Minister from Rwanda mentioned, talk about warehousing receipt, it's a bit new on the continent. They are not using it in so many countries. However, indeed, it's very powerful, and it's really helping farmers. I mean, we started the first experience in East Africa ourselves in Ethiopia. We helped develop we work with the commodity exchange, and we have developed the housing, the warehouse receipt. And indeed, you have seen cooperative or small farmers being able to go and even trade that, use as an instrument to trade on the commodities market, and also sometimes borrow, of course, from bank. So clearly, it has a huge impact on small farmers if they were properly organized in small cooperatives.
Mr. O'Connor, let's get your comment in. But as you comment, maybe you can also just touch on microfinance and the kind of difference that it is making in terms of driving financial inclusion and alleviating poverty.
Sure. Thanks very much for that. I was just going to make the point about the agricultural sector first, and to say that, you know, just in the same way that ICT has helped and been useful in increasing intermediation in the banking sector, it's going to also help in the agricultural sector in the sense that now you could use that to enable trading of commodities, clearing and settlement of commodities at the individual level. So I can believe that somebody will come up with the idea of an M-Pesa for an agricultural-based M-Pesa kind of product, which you can use to see how you balance up your supply of goods to the market and what you traded it for and when you've been paid and when it's reached your bank account. Now, the issue of microfinance is important, and NPLs on a gender-based assessment, of course, shows that women are better custodians of loans and pay back at a much better rate than men. Some would say that though the outlier performance of portfolios often show that risk and return are related, so some of the men end up doing the really outrageous things and making lots of money from the same pool of capital. Having said that, though, they also lose another pool of capital. So
Absolutely.
on spread, you see that the women might do better from the point of view of a banking view. But then microfinance, in fact, its entire story is not over. I think that we still have a long way to see in that story, and it's going to evolve primarily because of ICT. I think that the model is changing, the structure of the loan product is changing, the interaction between the demand point for capital and the utilization rate and the performance of the loans will change, will evolve. So I think that as we get a class of entrepreneurs and mix that with the ICT sector, we will see an evolution in that market that it's very difficult to forecast exactly, but I think that's going to evolve for sure.
I think that we spent quite a bit of our conversation looking at opportunities and how to access and finance those opportunities. But let's balance the conversation. Let's talk about the threats to Africa's investment case. And I particularly want us to talk about Ebola. And Mr. Prime Minister, I'm going to put you in the hot seat first and get an understanding of what are you doing to ensure that Cote d'Ivoire is insulated from the crisis that we're seeing in the region, and where are you looking for best case examples or practices to ensure that your response to and management of Ebola, should it infiltrate the country, does not have a material impact on your economic stability?
Well, I must say I'm not on a hot seat, but a cold one. And for the time being, there is no Ebola in Cote d'Ivoire.
Yes.
Even if we are same border with two countries, Liberia and Guinea, in Conakry. At the beginning, we take some steps to try to prevent people infected to enter Cote d'Ivoire. But we put in place some humanitarian corridors because, and also we have put in place possibilities for goods to be shipped from Cote d'Ivoire to Liberia and the other countries, because it's difficult to cut our links with these countries. And we have some help also from some developed countries, USA, with the center of CDC in Atlanta, and also from France. And so we have modernized our capacity in hospital and so on. And we can now detect locally people who are infected in our laboratories. Because at the beginning we had to send the blood and so on in Europe, but now we can do it locally. And I think that's also really important. You know that we have a meeting with President Jim Kim yesterday, and there is what was important, the financing of these, because that costs a lot of money. We have done it by ourselves at the beginning. The government put a lot of money to prevent Ebola from entering the country. We have also made a lot of communication for the people to know how to behave and not to eat, for instance, rats, bats, and so on, for instance, because they carry the disease.
So awareness has been a very big part of the campaign for the population.
Yeah, we made a very important campaign, but it's costly, but really important to do that. And what we lack for because there are some meetings in ECOWAS countries. I mentioned that ECOWAS is the sub-regional integration organization. We have to have a common approach to fight Ebola and to help the three countries, that is Liberia, Guinea, Conakry, and Sierra Leone, because the case in Nigeria has all been solved, I would say.
Right.
So we have to help them and to bring the international community to be really present in these three countries. So I do think that if you do that, on my own opinion, Ebola will be solved, the question will be solved by mid-2015.
By mid-2015. Let's get a quick response.
Yes.
We've got 5 minutes. Let's take Mr. Gancho. Let's come back to the minister, and then maybe let's get a comment about the Nigerian experience and how we've managed it there.
I wanted to add to the answers that you've been given regarding the challenges and the threats to the African growth story.
Yes.
One of the challenges is the lack of expertise and skills. Skills, in particular in Southern Africa, where, you know, the cost of labor is rising. Not because people are more educated or they have got more skills, but it's because of the demand and supply dynamics.
Yeah.
The productivity at a firm level is still very high, but the cost of labor is rising. For every additional 1 year of training or education, the cost of labor rises by more than 10% in Southern Africa. And that is a threat to the economic growth story because that chokes the development and also the attraction of investment into the African continent by outside investors, even internal investors for that matter. They need skilled labor.
Yeah.
So that is one challenge that I thought I should mention.
So highlighting skills, then, Mr. Minister?
Thank you so much. What I wanted to add was that actually these are shocks. This is just one of them, like Ebola. We've had economic shocks from the financial crisis. During the Arab Spring, we saw the impact on fuel, especially for countries who are importing the fuel. We also, when the Eurozone was affected, we saw how it impacted on our commodities. And now we are seeing security problems. We are seeing social, like Ebola. These are the things that are going to continue. How do we create resilience? How do we create buffers? How do we cooperate at the regional and continental and the global level? We need to put buffers knowing that tomorrow we don't know which other crisis is going to come. And I think it's very, very important to look at it more on how we cooperate, on how we create buffers within our own countries, on how we create buffers within the international financial institutions to respond to any crisis. Because today it can be one issue, tomorrow it will be something else. So we need to find a way of saying, tomorrow if it happens, what do we do? Do we again start mobilizing afresh? So this is very, very crucial that we cooperate in terms of addressing these kind of issues. And that's why the Ebola case is very, very pertinent, whereby we are trying to figure out what to do when the crisis has already started.
Right.
But if we are well prepared, I think we would have avoided a lot of lives that have been lost.
Maybe something to say, but because we are working already on the solution on that.
Yes.
It was not well known outside, because there's different meetings on the ECOWAS countries, in Accra, and so on. But you know that the world was informed of that when we have some people of the Western world who are infected. But there's a lot of work on the ground before that was known on the outside world. And I do think that now that there is a global information, I think the fight will be successful.
I've got 30 seconds for you, Mr. Orji. A quick comment on what we can learn from the way Nigeria managed and responded to the outbreak.
Right. I mean, I can speak to this from the point of view of somebody on the other side also as just an ordinary citizen. There were probably 3 things that I thought were clear. The first was swift action by the government. There's an infection, there's an isolation of everybody in the area, put them together in a quarantine. That was built very swiftly. But more importantly was transparent communication, frequent transparent communication. I think that was very, very important. You know, there was no burying your head under the sand and pretending it's not happening. Sadly, as Africa dealt with HIV/AIDS when this was happening, people kind of pretended it wasn't an issue. This was an issue. And the government went straight at the heart of it and communicated transparently. The third thing was improvement in hygiene. You know, almost everybody now has hand sanitizers and all that. So all of that thing is kind of helped. But let's be clear about one thing. Let's try to avoid this from mutating, and I hate to use the word mutate, but this should not turn into a branding problem for Africa.
Yes.
We have had a brand improvement. You know, we're talking about investments, infrastructure, a lot of that. Let's not go back to that stereotype in the past of this as a branding issue. Finally, let's not waste this crisis. Let's invest in our healthcare. This is really the key important message from all of this, because when this happened, people couldn't respond in some countries.
Mr. Prosper, 10 seconds. We have listened to both sides of the conversation, the opportunities and also the threats to the investment case. What is the future for Africa going forward in 10 seconds?
Well, for me, I think the future is very bright. If I look at our experience as IFC, I would say in 2004, we were doing $140 million worth of business in Sub-Saharan Africa. Today, 10 years later, we are doing in excess of $5 billion a year. So clearly, you can see the exponential growth. And it's not because we don't generate the projects. It's because the investors are there.
Yeah.
So I am very, bullish. The other thing is when I hear government leaders like the Prime Minister or like the Honorable Minister from Rwanda,
yeah.
I am, heartened by all of this.
And that is the investment case for the future of Africa. Thank you for making the time to join us, and a very big thank you to our esteemed panel who's taken on this topic with lots of insight and really, really robust conversations. For myself, Nozi Pombandra, thank you for having me. Thank you very much.